Let's start this up. Let's make sure we're streaming everywhere we need to be streaming right now. Let me check YouTube. Sorry guys, I just ate, so if you hear me like burp or something, I just ate. My bad. I haven't eaten all day since I got back from the gym. All right, looks like it's running well on YouTube. I'm assuming it's on Periscope and Dlive. Feel free to chime in the chat, guys. Thank you so much for following my stream. Let's see, is it live yet? It's not live yet. It is live, sorry. It's live on Periscope as well. So we're on YouTube, Periscope, and Dlive. You can catch this show. Plus, I upload the audio to the podcasting platforms. If you'd rather listen to this the next day or later this evening on iTunes, Spotify, we're all over those platforms as well. I'm going to keep my YouTube chat open, but I'm assuming there's people across all platforms that are watching this. We got a few people in the chat right now. Thank you for joining me today. Angela, big shout out. Thank you for modding. Let's, there's a lot of things we're going to talk about. So I did a lot of thinking over the weekend, guys. And, you know, I did a lot of research, okay? Research into different things, stocks, the market in general, the labor market. I did a lot of research into airlines. I did research into my local area in Virginia and, you know, what kind of industries are emerging and starting to pop out here. I did a little bit of research on gold and silver. So there's a lot of things that I'm going to try to get to everything I want to talk about in about 20 minutes or a half an hour here. There's a lot of things to talk about, digital currencies as well. This is very, very, very important. And, you know, I think things for me personally are just starting to click now that I'm in my 30s. I'm starting to understand, you know, how serious of a predicament we all are in, right? The country, the globe. There are huge changes right now going on underway, and there are a lot of problems, right? I do not want to be pessimistic. I don't want to be doom and gloom, but there are very, very serious problems. And we have to sort of read past the propaganda, right? Like when they put out the jobs claims and they say, oh, well, or the jobless numbers, the jobless claim numbers, and, you know, the media spins it and says, well, as long as it's, you know, below 1 million, we're doing okay. You know, that's just straight up propaganda. 2 weeks ago, it was 800,000, right? I think it was like 850,000 when they were expecting 825,000. Last week, it was 900,000 new jobless claims, right? We've got the mortgage forbearance. Maybe they pass a stimulus to push that off, but you now have millions of people that have not paid rent for 5 months, 6 months. This is a very, very serious situation, right? That the entire economy is, unfortunately, you know, I hate to say this, but is in ruins. And that's why we have to pray, right? At the end of the day, we got to give it up to God. We got to pray to the Lord Jesus Christ, pray for mercy, right? In the name of the Father, the Son, and the Holy Spirit. We have to be doing that every single day. We have to keep grounded spiritually, because that is going to be the best asset, right? The best asset that we have is God himself. So I just want everybody remembering that before we get into the doom and gloom. But let's talk about the stock market. Obviously, the stock market is heavily manipulated. All of the stocks were down today. As you can see, let me go to the S&P real quick. All right, this seems to be frozen. We'll just talk about the numbers. But the S&P was down. The Dow was down, I think, about 400 points today. NASDAQ was down. I mean, we're talking about very big red days. If you go and look at these charts, I'm sorry I don't have them pulled up on this stream, but if you go and look at the charts, very big down days in the stock market. All right. The stock market is addicted to stimulus. It does not respond to anything else other than stimulus right now. It is being propped up by the Fed. The stock market has been propped up by the Fed. I see this now, right? Because I have been day trading in these markets, and you know, I'm trading options. Traded today, made about $100. It was about an 8% gain in the account. I had a little over $1,200 $1,200 in there. So it was an 8% gain. But while I'm gaining 8% and closing cash every night, the markets are down today. And they've been down for 3-4 days in a row now. They've been propped up by the Fed. And it's a very serious, it's a very serious condition, right? The Fed is really one of the only things keeping the market alive right now. And sort of these fake numbers coming out about, the consumer reports and the retail reports. I guess retail was up about 2% from August, but these unfortunately are the last, in my opinion, could be, perhaps, right? This is not a guarantee, obviously, but perhaps these are the last dying breaths of the American economy that we grew up in, that we know, that we sort of took for granted. But on top of all that, you now have, from CNBC this weekend, older Americans are selling the stock market slowly but ceaselessly to junior generations. And this is where I want to, talk about the millennials, right? Myself and others that are just starting to get a taste of the stock market and maybe, putting some money away into some of these very high price stocks. The baby boomers are slowly starting to, liquidate a lot of their investments. Pension payments are going out. There's a lot of, there's a transfer here, and the millennials in a really big way could potentially be getting screwed with these very high priced tech stocks. The Amazons, the Teslas, the Apples, all this stuff is being sold to the millennial generation. But what is it going to be worth 10 years from now? What is it going to be worth 20 years from now, right? These are definitely things to be concerned about and things to be thinking about. But this article, I'll sort of sum it up for you guys without going into too much detail. But, baby boomers own more than half of the stock market as of right now, right? Out of individual investors, baby boomers, they own over half of the stock market. And so as they are selling to new generations, the millennials are slowly going to become, the dominant group within individual investors, right? This is outside of hedge funds and the Fed and banks and all of that. The Fed says right now that the richest 10% of households out of that, baby boomer generation own about 88% of the equities. So you're talking about a very small fraction of people own most of the equities, right? And I think this gap is only going to get bigger, right? I think we could, it's at 88%. Why not 90%? Why not 95%? Why not 98%? Of the richest or of the equities being held by the richest 10%. So instead of baby boomers, the fear kind of, or I guess one concern is baby boomers dumping their portfolios in mass. It probably is not going to go that way. It would be more like a steady bleed is going to persist for years. So this is just a new reality, right? There's going to be liquidity coming from these baby boomer generations into the market. Millennials are going to be buying them, but millennials are going to be buying very high price stocks. And it really, you have to wonder with a stock like Microsoft or a stock like Amazon, do you want to be buying that stock right now or do you want to be selling it? There's other stocks. For instance, big oil, right? ExxonMobil, Chevron, they are at, pretty close to the lows of March. Nobody's really paying attention to those stocks, but does ExxonMobil have a chance for recovery? Do you have a better chance getting a return on, let's say, a couple $100 put into Microsoft as opposed to a couple $100 put into ExxonMobil, which is going to do better 5 years from now, 10 years from now? Definitely something to consider. So baby boomers, are going to steadily bleed and kind of sell off their shares to millennials, right? This is what this article from CNBC talks about. And a persistent strengthening undertow of selling will hit as more Americans withdraw from their IRAs and their 401ks. So Americans or individuals, the investors, they control less than half of the U.S. equity value. So most of the equities are owned by the banks. And this is probably going to be another trend as well, is that the Fed is going to continue to buy equities. Banks are going to continue to, buy up more and more of that market share. And, this, whether or not we're going to see steep declines because of the baby boomers, selling, I don't know if we'll see that happen, right? The Fed, if they want to prop this market up for another 10 years, that's what they're going to do. But at the end of the day, we're going to see volatility, and it's very, very dangerous, especially with how high some of these prices on these equities are right now. So it's definitely something to think about, because I think when I first started investing in March, I got really excited about the Apples and, maybe trying to get a couple shares of Tesla and, buying PayPal and Square and all this new fintech that's out there. Facebook is another one that's very expensive. I mean, Microsoft, for instance, I believe they are, they're basically priced in 7 times their forward earnings. Right, so this is not good. You do not want to be buying at the top. Nobody wants to. Millennial retirement programs are going to be heavily allocated towards equities. And you have to wonder, is there a reason for that? Is there a reason that all of these expensive, high-priced tech stocks are being sold to the millennial generation? What if they're being sold to the millennial generation just to crash or lose 50, 60, 70% of their value 2 years from now, 5 years from now, 10 years from now, 20 years from now, and it was all one big trap, right? And millennials basically, got had. Definitely a possibility in my point of view. I like what I see, what I'm reading. I mean, this article talks all about that. So boomers are like sort of the old economy. And they did have a lot of dividend blue chip stocks, but millennials, a lot of millennials just are not interested in that. They're interested in these high growth tech stocks. But how much more of an upside do they have? I'm not saying that, Apple couldn't go to $700 a share. It might, right? But it could also go to $80 a share, right? If it can go to 700, it can definitely go to 80. Another interesting thing, too, I've talked about this the last couple of streams, is all of the call options that are being bought by millennial investors, right? You have millennials that are buying, in August, I think it was $500 billion worth of call options, very risky call options. And, I'm part of that, right? Because I'm day trading these options. So I'm, I guess, would be one of those millennials that's buying high risk call options. But $500 billion in August of this year compared to 2019, right? Or I'm sorry, 2009. August of 2009, it was about $100 billion. Okay, in 99, it was about $100 billion as well. But this year, $500 billion worth of very high risk, short term call options, being bought and sold and traded. I want to talk about this. We might actually wait until towards the end of the broadcast, but this is very big news. The Fed chairman, Jerome Powell, gave some, pointers. Was speaking at a press release, basically, for the Federal Reserve, or it's called the IMF, the International Monetary Fund. Anyways, Jerome Powell, the Fed chairman, is considering digital currencies, digital dollars of some kind. Now, they say they don't want to replace cash. They want to supplement cold, hard cash. But, I have a feeling this is kind of a ruse. China is already doing this. So there's a lot of pressure right now on the Fed here in America. There's a lot of pressure to move towards digital currencies, some sort of central bank digital coin, because China is doing it right now. So that's, sort of external foreign forces that are influencing our monetary system here stateside. So yeah, like I said, China has these, they're called CBDCs. They're central bank digital coins. And like I said, the Fed seems intrigued, but is not moving too fast. We'll talk more about that in a little while. Let's talk about gold. This is kind of a funny story, right? But one of the things I got to get out in this stream is that gold and silver I'm highly interested in now. All right, I do think that 10 years from now, well, this is what I know. 10 years from now, gold will never go to zero, right? 20 years from now, 50 years from now, 100 years from now, gold, 500 years from now, gold will not go to zero, okay? So I am very serious about getting precious metals. I'm going tomorrow to a bullion place to at least start my collection. But we had this funny story out of India. A plane passenger from Dubai was caught smuggling gold nuggets, and you'll never believe where. I think you can probably imagine what this headline reads for the listeners out there. This guy was so desperate to hide his gold because he didn't want to be taxed on it that he actually stuffed these gold nuggets, right? They look really, they look long, like they look as long as like a pencil or something, but they're kind of like, you know, thicker than that. They look like a hot dog, right? It almost looks like a hot dog. He put 4 of these things up his rear end. So the New York Post goes on to talk about how this, you know, this passenger, authorities saw the passenger walking oddly. Like, this is literally what it says, right? The first line is, Indian airport authorities literally struck gold when they spotted man walking oddly. So I guess he was trying to hide this gold, but the point is, right, the reason I'm bringing up this funny story and this guy, you know, trying to avoid taxes on his gold is because gold is still very precious, right? People are talking about gold. Gold is on my radar more and more every single day. I wish I was at least thinking about buying physical gold 6 months from now, right? I'm now thinking about it, and I'm about to be doing it. That doesn't mean I'm taking everything out of stocks and just buying gold, but, you know, starting a small collection of gold and silver and then collecting throughout the years couldn't be a bad idea, right? You think about in California, they have the wildfires and the power outages now. California, between the wildfires and the fact that California is trying this Green New Deal, you know, energy system, it's not looking good. Californians are losing power for a week at a time, right? Just imagine if your local store could not accept credit card payments or any sort of payment on the phone because the power's out, right? Well, what are you going to do? It would be really nice if you had some silver quarters, right? So this is why I'm bringing up this story, right, to sort of break the ice with the gold and sort of what my thoughts about gold the last couple of, you know, days and weeks, gold and silver. I think it's going to become, I think we are going to see gold prices rise, right? I think within our lifetime, within the next few years, gold could easily hit 2,500, right? It's now about 1,900 today. Gold could absolutely hit 2,500. And the thing is gold kind of keeps up with inflation. So, I mean, if you had bought gold 100 years ago or 50 years ago, or even 30 years ago, you'd be better off today. It'd be, you know, you'd be able to sell it. So it's definitely a long-term thing, right? This is not about trading. This is about, I want cold hard cash. I want to preserve some of my net worth and, you know, preserve some of my assets in cold hard cash. We really do have to be our own central banks. If you don't think gold is valuable, right, or you think, oh, all I need is like paper money and you know, dollar bills and money in the stock market. The thing is that the central banks are buying gold. They're buying more gold than they ever had before. You've got Warren Buffett investing in gold companies. You know, he's always sort of made fun of gold or gold bulls. Warren Buffett bought billions and billions of dollars worth of gold, Barrick Gold stock earlier this summer. And just in a grid down situation, whoever has the most gold is going to be like the richest person in their neighborhood, right? So this is why I'm excited about starting a small collection. I'm probably going to start with silver, but I'm going tomorrow. I'll definitely make a video about it and show you guys what I'm picking up. But you know, we're talking about long-term wealth, preserving it. it'll never go to zero. It's God's money, right? That's what I've sort of come to the realization of, and I've prayed about this. I've been praying a lot, been praying to God to sort of show me, to show me what I need to do, like to show me financially how to, start working towards financial security, right, for myself long term. And gold just keeps popping up on my radar. It is everywhere. It's not everywhere, but there are rumors and whispers, and I can see the bullish gold run, right? I can see it. Imagine the American economy collapses. You got to think about how bad the economy is. The restaurants, the airlines, schools. You got to think about the states themselves and the cities and towns. There is so much bankruptcy, so much debt, right? When all of this collapses, and it will, right? It probably will. Like, let's just be honest. The chances for another, 10-year bull run right now are not very good, right? The markets and everything has to reset eventually. And we could just have to realize or come to the realization and just own up to the fact that we were born. We were kind of born, a shit deal in a way, right? We drew shit cards, and we're sort of coming of age and coming into our 30s, 40s, and 50s during perhaps one of the biggest depressions that the world has ever seen. Right. The sooner we accept that possibility and accept that it could be a reality, the sooner we're going to be able to figure out what we need to do. And I just feel like, because I've been seeking God in my life, God is telling me every single day, buy God's money, buy my money, buy at least some of your net worth in money that has been valuable for thousands of years. Right, that the central banks can't take away from you, or that's at least less affected by this paper monetary fiat system. I mean, this is very serious stuff, guys. Like I said, you've got China pressuring now the Fed to come out with digital currency of some kind, right? China is going to do it. Other countries are going to do it. And all the other countries are doing exactly what the United States is doing, right? We could talk about the debt. We could talk about the propping up the stock markets. We could talk about the really bad labor markets, the housing bubbles, all of this stuff. This is very, very, very serious. A lot of things have just been clicking for me this weekend. I don't want to take all your time up tonight, but I got a couple more things that I do want to go over with you guys real quick. We've only been live for 22 minutes, so I'll probably go for about 30. Just today, right? This is out of hitco.com. Markets are addicted to stimulus as anxiety builds. What to expect from gold price with election 2 weeks away. The point of this article and the point of a lot of these gold articles right now is that, a lot of people are worried about the election. A lot of people are worried about the stock market and how the election is going to affect that. Regardless of who's elected, right? Whatever the outcome is for the election, it's going to be bullish for gold. The next 10 years is probably going to be bullish for gold and silver. And just precious metals in general. There's platinum, right? There's other cold, hard assets to own. But stacking some brass, embracing at least, even if you don't need it, right? It would be better to have a few $100s, a few $1,000s in precious metals in case of an EMP or some sort of terrorist attack, or the federal government shuts off your power, right? In any of these events, you'd be better off with thousands of dollars of precious metal than you would be if you didn't have it, right? That's basically my point. And, I believe that gold is going to become more valuable. I believe silver is relatively at very low prices right now. Silver could be over $30 an ounce soon. I want to get in before it is. Yeah, and this is really bad, right? It's looking like, all right, remember I said retail was up about 2%. The consumer reports are looking good, right? People are buying TVs, they're buying cars. I mean, this is crazy. You've got most Americans, that don't even have a month's worth of, emergency fund put away, but everybody's going out and spending that money, right? We all went and spent our stimulus checks. I'll admit it. I bought plants and a couple of outfits with my stimulus check, right? And I invested it into stock. But, I guess the plants you could think of as some sort of, investment. But the point is that the benefits, right? This is from The Hill. Expiring benefits raise economic stakes of stalled stimulus talks. The benefits are running out. It doesn't look like there's going to be another stimulus, right? This is what I want everybody to realize is, especially if you're waiting around for the stimulus or you're waiting around for an injection, and some people are, right? I mean, it's sad, but some people are literally right now waiting for the government to bail them out. Their arm is out with their sleeve rolled up, and they're waiting for an injection. This is where a lot of our fellow Americans are at, and it's spiritually a very, very dark place. But we are being used as pawns right now. The government, Trump, especially Nancy Pelosi and the Democrats, they are using us like pawns. Nancy Pelosi is using the American people as pawns to get money from Trump's federal government to bail out these failing states and these failing industries on the West Coast. They want to bail out Hollywood. They want to bail out Disney World. They want to bail out the airlines. They want to bail out Los Angeles City, right? This is absolutely crazy. And, all of this is going to have, we don't even know what the fallout is, right? They keep telling us the recovery's here, the recovery's coming, right? As soon as we get the injections, everything's going to go back to normal. But, there's a chain reaction happening right now. Airlines are going to be laying people off for the foreseeable future. You've got cities now, because of the malls closing and the retail doing so bad and the restaurants going out of business and stuff. There's no conventions. You have entire cities that are losing their tax revenue source. So, these are very, very serious things. But the point is the stimulus talks, they're using the American people like pawns, right? So we need to figure out how to get our own income. Like, let's just get real. Some of us are rooming with people. Some of us are rooming with family. Some of us are sleeping on couches. Some of us have roommates. Some of us are, I've been in worse situations than I'm in now, right? Like, there are Americans in California just wandering the streets. If we have a roof over our head tonight, God is blessing us in many more ways than he's blessing others. And we all have choices to make, but, developing your own stimulus check, right? Maybe selling something that you are not using, learning new skills. Like I had to learn new skills. So I'm trying to teach myself how to garden and grow plants, raise plants. I'm taught myself to trade, right? I'm now actively day trading every single day, and I have an income source coming in every day. So, these kind of things, whatever it is you got to do, we're going to need it because the jobs are not there. There's too many people in this country. Even if some of the jobs come back, there's a lot of competition. There's a lot of affirmative action and stuff like that, right? We don't need to get into all the politics of it. But the point is that resources are finite, and the currency is becoming devalued. It's going to be harder and harder to acquire resources with the amount of currency that they're giving us, but also the amount that the currency can buy. It's all doom and gloom. I mean, it's not, but economically speaking, we're probably on the precipice of a very long, deep, dark depression, something that could make the crash of 29 look like nothing, or the crash of 08, right? Like, our jobless numbers, think about the jobless claims, 800,000, 700,000, 900,000, a million, right? At the peak in 2008, 2009, it was 600,000 at the peak for like 2 months. And then it, dwindled down. We've been keeping like 600, 700, 800,000, 900,000 weekly jobless claims for months and months on end. Imagine a situation where the stock market is in the red for days, weeks, and months. Just imagine 12, 13, 14 months goes by and the S&P 500 has been red for 13, 14 months. This is what we're talking about, guys. This is what we're talking about. And all those millennials, right? A lot of us that are buying high-priced stocks, very, very risky, very high risk. But learning new skills, learning new trades, like, that's how I'm going to survive this shit. A little bit of interesting research, right? I feel like all of us should be doing research in our local areas about what's popping, what kind of industries are popping. You're going to find, especially if you're an investor and you're putting money away into stocks, you're going to find so many ideas for your investments or maybe your trades and stuff. Just in the Virginia area, right? Because that's where I live. In Northern Virginia, I didn't know this, but I guess because of DC, the intelligence community, the FBI, right? All this kind of federal government stuff, data centers are huge, right? Data centers for like companies like Zoom or Google, Facebook, Amazon, they're right here in Northern Virginia. So you've got the data centers, the digital real estate, like Iron Mountain, right? Their warehouses are really big buildings for digital data centers, right? Iron Mountain is one of my favorite companies, really big in Virginia. Microsoft, according to this article from the Roanoke Times, Microsoft recently, let me see if I can find this here. You'll never believe this. The Washington Business Journal, they say, reports that Microsoft has bought 66 acres in Loudoun County, which is in Northern Virginia, for a new data center operation, right? Microsoft, 66 acres they bought, not 65, not 67. I mean, you really can't make this stuff up, but I'm not going to get into the esoteric right now. The point is that this is like a new Silicon Valley, and because the federal government is the main client of all of this, these data centers, and it has a lot to do with these companies coming and moving here. This is going to be a huge hub. It's something like 60% of the world's internet traffic goes through Northern Virginia, right? So this is huge. Now think about all of the power and energy that's going to take. I didn't even know about this company here, Dominion Energy, right? They pay like almost a $4 dividend annually, and they're at 80 cents per share right now, 81 cents per share. Right, so think about that. I've never even heard of Dominion Energy, but apparently they're a really big energy company, and they're supplying a lot of energy to Virginia, North Carolina, Ohio. I'd never heard of them yet, right? Because I'm kind of new in the stock market or whatever. But this is not one of those popular stocks that are always talked about, but it's doing very, very well. And this is the kind of information you will get when you do research about your local area, especially coming from like an investment standpoint. So I'm checking out the fundamentals of Dominion Energy, and it looks a lot better than Chevron. It looks a lot better than ExxonMobil. And the share price is doing relatively well. I don't have the charts pulled up right now, but on a weekly chart, it's doing very, very well. But Dominion Energy, Duke Energy, right? These are the companies that are supplying all of these data centers and these big tech giants with electricity to run their operations. So that's what's going on in Northern Virginia, right? And I do think we're going to see different areas of the country become, the power and the money and the success is going to become more consolidated. You want to do research and figure out exactly what's popping, because there may be opportunities in your regional vicinity, especially for investing in stocks, that would be better than buying Microsoft at $250 or buying, Facebook at $300 or PayPal at $200, right? There might be better ideas out there, and that's kind of just why I'm bringing this up right now. So a couple of things here with the digital dollar, right? Because we know that's coming. It was a proposal that was in the Democrats' plan, I think, on the first stimulus bill, but it didn't end up getting included. But the Democrats have already proposed, give everybody a digital dollar, give them a digital wallet, and we can just put digital coins, right? Fed coin on their wallets. But that also means they can censor your purchases. They can say, oh, you can buy food from this store, but not this store. Oh, you can buy food from the big corporations, but you can't go out to a mom and pop place and buy groceries or get a meal or whatever. So censorship over our money is definitely coming, right? Because we know we're already being censored with our speech. Of course, they're going to censor your money, censor your purchases, and censor what you can have. That's just that seems to be the future here. But you've got the Fed chairman, Jerome Powell, speaking today at a press conference for the International Monetary Fund. And he talked about digital currencies. All right. Let's just see if we can. There was a specific quote I wanted to read to you guys. He says, okay, yeah. So basically, what he said was that, you know, the main focus is not replacing the dollar with CBDCs or central bank digital coins, but he says the main focus is how it could improve the already safe and effective, dynamic and efficient domestic payment system. So, you know, they're kind of selling it to us as, well, you know, this is just going to help the payment systems, the electronic payment systems, right? We're still going to have cash. But we just want to, you know, another thing he said was it's better that America is the first one that's right about this or does it in the right way as opposed to being the first one to do it, because there is a lot of pressure. The reason he's talking about this is because there's a lot of pressure from China right now, because China is moving to a CBDC, right? This is happening right now as we speak. They've already issued 10 million in free money, right, to Shenzhen, and people are using the digital dollar there. They're rolling it out in different cities. Yeah, this is the quote. Powell said, quote, "We don't think it's more important to," he says, quote, "We do think it's more important to get it right than to be first," is what he said. And so, you know, we'll have to see where this goes. They don't appear to be rolling this out, you know, immediately. Powell also said that, you know, Facebook's Libra project, Facebook has like a cryptocurrency, I guess, called Libra, has also accelerated, you know, central bank interest in developing digital currencies. But let's see. He also said, "I actually do think this is one of those issues where it's important for the United States to get it right than it is to be first." Right? That's that quote again. So it's hard to tell, you know, how serious he is about this, but I think they are pretty serious about this. Mexico as well. We are lagging Mexico in this new digital currency. They have the Cobro digital dollar in Mexico. Allows users and merchants to transact in digital pesos using QR codes. So, I mean, you've got Mexico that's putting heavy pressure on the Fed. What's going to be the result of this? Probably the main result is going to be that currencies are going to be digitized, right? Eventually, within our lifetime, probably before too long, currencies will be 100% digital. Cash is going to be something like at the bank. You're going to go to the bank and you won't be able to withdraw cash. This is coming very, very soon. You will not be able to withdraw cash, but they'll say to you, well, we can give you money on your card, right? The money is available on a card or on an app. That's what they're going to tell you. They're going to say, well, you can't take out $100 cash, but it's available on your card or the app if you want to use it. That's just, I think that's happening, right? We know it's happening. This is what they're telling us slowly but surely. And so countries are going to be, I was reading the Pomp letter, Anthony Pompliano's little daily newsletter, and he basically says that countries are going to be competing on monetary policy, right? Once all the currencies are digital, then you're going to have this new competition between the central banks and the countries that they're in. They're going to be competing for monetary policy and the most efficient. And so we could see the dollar lose world reserve currency as a result of something like this. And think about this. This is a fact, but it just goes to show you how global all of this is. The majority of the $2 trillion cash in circulation are actually held outside of the U.S. And like I said, China has already issued 10 million yuan in digital currencies, and they're rolling out these programs in Shenzhen. And yeah, Powell just claims, oh, we're just going to treat these as we're going to treat it as like digital payment methods, right? That's all it is. It's not going to replace cash. It's just going to be a digital payment method, right? That's what they want us to believe about all this. I don't know. All right, let's really end with some doom and gloom. Let's talk about some technical analysis here. This is from Market Watch, okay? The headline is "Warning Sign: The Dow Industrials Lags Behind transports, the Dow transports average. And that one keeps making new highs. Now, the technical analysis, this is some of the oldest tech. I didn't know this before I read this article today, but some of the oldest technical analysis that's been used for like over 100 years is something called Dow theory. All right, because the Dow Jones Industrial Average, that used to be like the only, the only one out there, right? The only average. Long before the SPY and the NASDAQ, the Dow is like the original. So this article from MarketWatch says that Dow theory, formulated more than a century ago, is often referred to as the first form of technical analysis. Kind of interesting. And it's been described as the oldest stock market timing system in widespread use today. And what they're talking about is the Dow convergence, right? I'm going to show it to you. This is the graph right here. For the listeners out there, we're looking at a graph. And it's the two averages, the Dow Jones Industrial Average and the Dow Jones Transport Average. And when the industrial average starts lagging behind the transportation average, it's called the Dow divergence. Sorry if I said convergence earlier. The Dow divergence. And this is a very negative, bearish, doom and gloom sign that things are not very good. Now, you could argue that, well, the Dow doesn't really represent the economy anymore, and the Dow has a lot of these older names and stuff. It's not real. It's not like the SPY where there's like more companies and they're all tech and these growth stocks. But for 100 years at least, they've been using Dow theory and this indication, right? These two averages being used like an indicator, right? Sort of how I look at the SPY or the VIX or the QQQ when I'm trading. I sort of use them together as an indicator. Well, this indicator, the Dow Jones Industrial Average, under and lagging the transportation average, that's very serious stuff, right? In the past, it has meant deep, dark depressions and a lot of financial, economic pain. So that being said, I cannot wait till tomorrow. I transferred money this morning, out of my trading account back to my bank, and I'm going to be investing in silver. We're talking cold, hard silver that I'm gonna start my collection and then just start collecting throughout the years. Obviously, this is like a very long-term thing. I'm just trying to preserve a little bit of wealth in something that is outside of the central bank system. Like I said, we really have to become our own central banks. The central banks are not our friends. They're not here to help us. If anything, they're going to hurt us, and they're going to hurt us really, really bad. They already are. Our country is getting sold out. We are losing our economy. We are losing our culture, our society. We're losing our jobs. If you don't believe me, just pay attention to the weekly jobless report. Every Thursday it comes out, right? It's the weekly jobless claims. They're new claims. They come out every week. It's going to be like 1 million this week. This is very serious, and I want to be optimistic, but I don't want to sugarcoat crap. I don't want to, buy into the lies of the Fed, right? The Fed propping up this stock market. I'm not going to get burned by high-priced tech stocks that, are not going to be able to sustain this kind of valuation for 10, 15, 20 years to come. I'm not going to be the one that gets duped by that. And when we think about precious metals, right, God's money, it has been there for thousands of years, right? 10,000 years people have been trading gold and silver and other metals, jewels, right? This is the kind of stuff I'm thinking about, right, long term. But I'm investing in myself. I'm developing a, let me show you my P&L. Let me just go to Instagram real quick, show you my P&L for today. I've developed a new skill, and I'm trading, and it's going pretty good for me. We got Jess Coco on my screen. Shout out to Jess Coco. So yeah, I caught some of this down move on PayPal, This was a little bit tricky because you had the bull trap there, but we were over a supply zone. You can't see it. You can see the demand zone that it fell into and immediately bounced. But on PayPal, I managed to catch, I would say most of this, probably like 2/3 of this move I caught. And the trade cost me like almost $1,000, right? You gotta risk a lot to to win big, but that's just the kind of volatile markets we're living in. They're definitely manipulated, but you can see that it's been down, right? It's down today. All of the markets are down. This is just PayPal stock, but this is what I traded. I traded puts. I made about $111 today doing that. Right now that I have 1,300 in my account, and with about 1,300, I've developed this skill where I can kind of consistently pull $50, $75, $100, $150 out of the market every day. Sure, I've taken some losses. September, I took like a $700 loss altogether, right? That was a month that was in the red, very different from August. But the point is that I'm investing in myself by learning this skill, by taking the time this summer to really learn how to trade these option contracts. And, that's an 8% gain, right? The markets are down and my account is up 8%. I could lose 4% tomorrow and I'm still going to be up on the week. So, it just goes to show you the power of learning how to, do something like that. Other than that, like I'm learning how to plant, right? I got little baby tomatoes growing and, so I'm trying to keep on top of everything. I know some of you guys like the, you like more of the political stuff. Here's a little political meme for you guys. I know you guys are here for the conspiracy and the politicals, and I'm definitely into that. I'll definitely still be hitting that, and we got the election coming up. But I'm very interested in economics, very interested in our economy, very interested in wealth, growing wealth. Trading, investing, personal finance. So, we got to cover all of it. But with that, I hope you guys have a fantastic rest of your evening. Thank you for joining me for a few minutes. Please do give the video a thumbs up. You can listen to this on iTunes, Spotify. We're everywhere, all over the internet. You can catch it live on YouTube, Periscope, or Dlive. But the links for everything are either in my bio or under the description down below. Big shout out to my patrons, right? I really appreciate you guys supporting the channel. And with that, I hope you guys enjoy the rest of the evening. Again, like I said, have a fantastic rest of the week. As always, this is CMC Broadcasting. I'll see you next time. God bless.